today in the finance story, we have the privilege of interviewing Varun. He'll shed light on things that will give us insights. So we will not be afraid of investing in crypto or suggesting our clients to invest in crypto. So with that, I would like to welcome Varun. Varun, thanks for being on the finance story.
Thank
So
you.
before we dive into the cryptocurrency space, why don't you tell us something about yourself, about your background, how you became a CA?
I've grown up watching my dad be an accountant. He started his tax practice over the past years. I've seen him not just be a chartered accountant, but also be like a mentor, a person, a mediator for parties and things like that because of the work that he's been doing. And that is what I always wanted to be when I grew up. In fact, there is an absolutely hilarious story. A friend of mine in eighth, she still recounts that the standard typical question a teacher asks, "What do you want to do when you grow up?" And I was like, "I want to be a CA." And people are like, "You're in eighth standard. Who wants to be a CA?" I was like, "Yeah, that's probably the plan." So that's what I always aim to. Like, I did my internship with my dad, and my first job, the day I became a CA, I got an offer at PwC and I was like, do I go the same route as my dad did or do I do something else? And I decided that I need a bit of exposure, see what happens outside in the world. And that's when I moved to PwC. But a couple of years later, I decided, no, I want to do something for myself, work with smaller businesses where I have a bit more hands-on approach, where I'm a bit more connected. And I started my tax practice. That was back in India.
Okay, great, great, great. So, now coming to the question of why the transition from Mumbai to Australia. Were working for almost 2 to 3 years in your own practice. Why did you decide to try a new geography?
So I think the main reason was uh, getting out of the comfort zone. And I always knew that, yes, my dad has a tax practice and I can merge what I am doing. Um, and if I ever want to come back and work with him, the reason we decided to move was because my wife and I both wanted to try something different apart from being stuck into a regular job in Bombay where a lot of time goes in commute. The work life culture that we weren't too keen on, and we wanted to figure out what other opportunities exist in the world. And we knew we were taking a massive risk because my wife had a secure job, I had a good tax practice going on. But I think the main thought at that point was, if not now, we'll probably regret it. There is, as a professional, there is a lot more to learn rather than settling down at 27. And that was the biggest reason why we decided, yes, the biggest, the worst thing that could happen is we would come to Australia and not get a job. A year or two later, we'd have to go back. And that's what happened. Like, I came to Australia and KPMG was a good start because it's a big firm. You get big four exposure. And then once I did that for a couple of years, I was like, okay, let me understand how local businesses work. So I moved to a smaller tax accounting firm. And over there, in fact, I had a client who invested into, like, they created a super fund for, they created basically a trust for investing into crypto, clients' money into crypto. And until then, I was pretty much the same. I was like, too volatile, too risky, it's a scam. I'm not sure whether, crypto really, I don't think as an accountant, I don't want to look into it. But I spoke to the client and I realized like they're definitely really smart guys and they know what they're doing. So that's when, and if you're doing a client accounting and tax, you really need to understand their business. So the more I looked into crypto, I realized that so I also started trading in bit in crypto, which is a completely terrible rabbit hole to deep dive into. But that is when I saw the transactions that I generated. And as a regular, normal user of crypto, as an investor, I had like more than 1,000 transactions for the first year. And I realized that reconciling all of this for the year end is an absolute disaster. And I would be too embarrassed to let somebody else do my tax returns, to be honest. I mean, that's the one thing that I'm good at. So that is when I realized, okay, this is something which is really interesting and I need to get into it. But I did think about it quite a bit. I was like, I'm not sure whether this is my expertise. Yes, tax compliance is my expertise, but anything else, building something for the public, I'm not sure whether I can do this. But the more I spoke to people, the more I went for Web3 events, meetups, and I realized that this, I personally believe it is the same as what the web 2 or the actual internet was at in 2000. Most of the people thought there's no real use, and you could not imagine that we could be video chatting in 2022. And if I don't, I will regret it. If I don't look into it, I'll, I wouldn't say be left behind, but more like this is a chance to try out something which hasn't been done before. And it is massively risky, yes, but of course, my wife has a stable transfer pricing, accounting, tax job, so that helps a lot. And she's like, you know what? Stop wasting all my money. Just do something sensible. But she's pretty supportive, and I think also now that we've taken the risk and started from scratch in Australia gives me a lot more.
True, true, true. So coming to the crypto side of it, first of all, help us understand what is decentralized finance, or as we call it, DeFi.
Yeah. So decentralized finance is basically when you do any transactions without the help of a middleman, generally a bank. So all the transactions happen on blockchains, which are peer-to-peer verified, which basically means that there are thousands and millions of computers across the world where the transactions are verified. So in a general scenario, there would be say an X bank via which I would make a transfer payment to you. So the HDFC or whatever bank will approve the transaction, and that's when the payment will get into your account. But for decentralized finance, no matter what happens, no matter whether US and Europe say the SWIFT transactions for X country are not allowed anymore, nobody can stop it because there is no central authority which can regulate the transactions. And that's the general premise of DeFi or decentralized finance.
I am sure that you realize that the impact of crypto in the world that we live in. How did you decide to build a product around it? What is the homework that you had to do, and you had to understand the tech part?
So in fact, in 2014, I was very keen on building a regular tax software in India, and that never happened. Basically, what ClearTax did in 2015, 16 or something. And I was really keen on that, but my biggest challenge was not having a tech co-founder who could support me. I didn't want to rely on a developer to keep paying a developer whose only motivation was the money and not any real involvement in the progress. So the over the past few years, I ended up meeting who is now my co-founder, a friend who is a software developer, and he's a data scientist. And him and I used to have a lot of conversations about crypto in general, which were non-tech related, non-accounting or tax related, but just behind the regarding the logic and what crypto is doing, and understanding the technology behind it. And that is so when I started doing my tax returns, I was like, okay, this is a massive problem. And he had recently sold off his startup, like the startup got acquired in US, and so he was thinking about picking up a new challenge as well. And we brainstormed for 4 to 5 months, thinking that is this something that we can possibly achieve, knowing that there are competitors in the market. People have been building for 3 to 4 years and took about 3 years plus to launch, whereas we've probably built the product from scratch in 8 to 10 months. So we knew the journey that we were getting on is going to be risky and scary because one, the regulations keep changing. What the government expects keeps changing. So every time the tax law changes, a lot of the software logic changes. And plus there are new things coming in with NFTs, with soulbound tokens, with all of those tracking those, analyzing those, and keeping your software updated is always going to be a challenge. And I think that will be a challenge irrespective of what stage we are at. But this was probably an opportunity which was, I would, I think the word is interesting. And having a partner, a co-founder who has complete software domain expertise, software expertise, and I was the one who was very comfortable with how I wanted from a tax perspective. And it was purely because of that combination that we could actually sit down together and start working on it together.
Okay. Okay. So how does DeFi Tax Calc play a role in this scenario?
So DeFi Tax Calc is basically what happens is today, in spite of the fact that Bitcoin is more than a decade old, Ethereum is probably 6 to 7 years old, and most of the DeFi transactions and smart contracts work on Ethereum. So the problem is every time you do a transaction using Bitcoin, the report is generated in a different format, and you can buy or sell Bitcoin on an exchange, similar to how you buy or sell shares. So those reports are generated in a different format. When you do a smart contract, if you lend crypto to somebody, or if you borrow crypto, or you put it similar to a fixed deposit. Also, you get interest in a bank FD, but the interest automatically comes to you in your rupee, dollar, etc. What happens over here is every week, every month, you will be getting some form of reward. But the value of the currency at the date at which you would have got is relevant for tax purposes. A lot of individuals and a lot of companies now transact mainly in crypto, which means that they have multiple records from multiple sources in multiple currencies in weird formats. And reconciling all of that is what we mainly do and generate tax reports to make the life easier for an accountant or their in-house accounting. And what we want to do is make compliance easier. So if say X person used Tornado Cash, he himself would still know which wallet it went out of, and after all the roundabouts, which wallet it came into. As long as he gives us those two, he can still file his reports with the tax authorities. Everyone knows what his X wallet was.
Okay. So help me understand this. Is DeFi Tax Calc an application or a software that any entity can, sort of download and put the information in it, or is it only through your entity that they can perform this transaction?
So no, it's more like a software as a service. It's a web-based platform. So how it works is obviously we haven't opened it up yet in general. You log in, you take a membership, an annual subscription basically, and then you load all your reports, all the transactions that you've done on any platform. They'll get loaded onto the platform, and the software will in the background run through all the transactions, and it will give you a transaction summary which you get to review whether in case there might be any differences. And once you approve of it, we calculate the capital gains and interest, etc. happens on the platform. Once you review all of that, you get a year-end tax summary report. So we reconcile based on, there is a transaction ID generally, which the blockchain hash ID which you get, and the wallet will give you that ID, which you can then match with where it has come from. If you transfer from wallet X to wallet I, you will still get a common transaction ID between the two, which we
Okay.
can review and match that at this time, this amount of Bitcoin or Ethereum was sent from X wallet to Y wallet, and whether there are any tax implications. And the thing with crypto is because the values are not always, in fact, most of the times, as of today, say you can buy and sell crypto in rupees. But what happens is the moment you actually start trading in crypto, the values you might get Bitcoin in place of Ethereum. So there is no rupee value involved or dollar value involved anywhere in the transaction. And then you need to manually calculate all of that.
Okay.
Similarly, if you move around to any other countries, if you're getting, say, foreign uh, money in crypto, in normal terms, you would get X USD and you just convert the USD. But here it becomes a lot more convoluted.
So if you say for income tax in India, if you want to go for a source document, you can go to the income tax website. Is there any such source where we can identify or understand about cryptocurrency?
I think the difference over here is, and that is what probably makes it so much more interesting, is there is no source. Everyone's learning, and that helps people like you or me who want to say try out something right now, as opposed to somebody who wants to wait and rely on a book being published. Because by the time a book is published, things have
It's
changed.
still news. Yeah.
Yes. So it's too nascent, it's too new, and last year nobody had heard of NFTs. And by the time people would have written a book on NFT, which would have got published, etc., NFTs are not even the next big thing anymore. So the best opportunity is you need to have some skin in the game, which obviously is easier said than done because with crypto there is money involved. So I personally learned a lot when I started thinking of investing, even if it's a few dollars, $50, $100 into random coin, understanding the use case of the coin. And when people say crypto is a scam, unfortunately, 99% of it is true. 99% of it is still a scam. Let's be really honest about it. But it is similar to the multi thousands of companies that were created before the dot-com bubble. 99.9% of them did not exist 2 years later, but the few that did, the Apples and the Amazons, they changed the way we look at the world. And that is what Ethereum and Bitcoin and some of the really useful coins are expected to be doing over the next few years. The only thing is, to understand that, you actually need to figure out, you need to go and read, like even something simple as understanding what Ethereum does. Ethereum itself has a website which is more detailed than any probably income tax ready reckoner, I would say. So, but to understand that, you would actually need to do a transaction on Ethereum. You need to not just buy and sell, but understand what they are doing and start talking to people. There is a lot of content on Reddit and Twitter because that is where most of the people who are into Web3 generally hang out. So it is almost impossible to, yes, you can follow good people on LinkedIn and they keep posting regular updates, etc. But that is still, there's going to be a different level at what they post and what you understand. So you need to go get into communities where people are talking similar language as you, and you need to start understanding from the basic and need to start trying out and feel.
Okay.
So don't, one very important suggestion is, don't pay for fancy courses which promise that you will be learning XYZ about blockchain or crypto, because most of them are too outdated.
What would be the requirement in the future in this space for financial professionals?
I would say it is almost impossible to see any regular financial field not getting impacted by blockchain at some point. If you look at, say, accounting, auditing, insurance, financial services, all of them will have blockchain related transactions coming into them. So a lot of people, when they say that accounting is getting automated, auditing is getting automated, you're losing jobs. I don't think people are losing jobs. Just the nature of jobs are going to change. And with a lot of blockchain transactions happening, audit will become different to the way people are doing an audit now. And you'll need to do a lot more of blockchain audit. In fact, there is, as of today, just one large company called Chainalysis, which does audit and helps governments track crypto, track all of this tornado cash transactions and all of any illegal or financial transactions if people want analysis on what money is moving where, etc. There's literally one large company which is doing it all. So there is a lot of scope in the market over there. Plus, jobs will shift towards that because the more companies that do blockchain, even today, companies like IBM use blockchain for their day-to-day transactions. Coca-Cola uses. So if you are accounting, if you are auditing, you will need to understand how these things work before you can get jobs in those industries. A lot of smart contracts will start happening in the insurance industry, which means that one, you'll need to know what a smart contract is, and a smart contract which is basically a contract which doesn't involve any humans and executes on the blockchain.
Okay. Thank you. Thank you for sharing so much information.